Well, we mentioned how stocks were weaker on this news of U.S. President Donald Trump unveiling tariffs on auto imports. It also led to some weakness in our Canadian dollar against the American currency. And of course, we've already talked about a weak loonie that was just struggling to hold 70 cents U.S. coming into this session. Benjamin Reitzes is Managing Director of Canadian Rates and Macro Strategy at BMO Capital Markets. He joins us now. Benjamin, in terms of the market response to the auto tariffs, what's been happening in currency land this morning?
Well, pretty subdued. I mean, we would have seen some reaction overnight, and it just wasn't all that much at the end of the day. And there are a number of cross currents impacting the currency right now. And as much as the auto tariffs are a negative for Canada, they're also a negative for the U.S. And U.S. economy and U.S. consumers will suffer on the back of this. The U.S. imports a lot of cars. It's not as if that demand's going to evaporate immediately. And so the weakness or the anticipated weakness on the U.S. side on the back of this is probably weighing a little bit on the U.S. dollar for now, and maybe that's what's keeping the Canadian dollar from softening even further.
Okay, because if we go back to the fall, the loonie was trading give or take around 75 cents U.S. Here we're struggling to hold 70, but you're saying if there's a general consensus that trade wars hurt multiple economies, including the Canada and the U.S., there's kind of a balancing out in the currency market?
To some extent. So the weakness in the loonie over the past number of months. I mean, we've really traded sideways since December, around that 69, 70 cent mark. But before that was anticipation of effectively what's going on now. Weakness in the Canadian economy on the back of tariff threats were weighing on the loonie. We also had the Bank of Canada cutting rates very aggressively. Well, the Fed was not cutting quite as aggressively at the bank. And so that interest rate differential has widened substantially. That's weighed a lot on the currency. That is a big driver of where the currency goes. And now we're at a spot where, as much as the tariffs weaken Canada, they also weaken the U.S. And so that interest rate differential maybe won't be quite as wide going forward if the U.S. economy weakens enough that the Fed is forced to continue cutting rates. Meantime, you have the Bank of Canada on the other side. They're thinking about things a little bit differently with a lot more focus on inflation right now.
Yeah, and actually we did a report with CTV earlier about how just the fact that the loonie has been weaker hurts the U.S. economy in the sense that Canadians haven't been making as many trips stateside in recent months. Okay, so we got trade tensions. We've got, what does the Bank of Canada do? We've got other factors and considerations. What, in your opinion, will be the biggest drivers of what happens with the loonie over the, call it, next quarter or so?
Well, next week's going to be pretty big when we get the announcement on the reciprocal tariffs. I mean, that is probably it for now, I think. I mean, we're pretty much on hold on most of our forecasts until we get that information, because these tariffs just loom so large and they have the potential to have such a significant impact on the outlook that it's pretty challenging to really have much clarity on what's going to happen in the near future, even without that information. And then on top of that, we have an election coming about a month away now, and fiscal policy is going to play a role here. And so I think that part is pretty key. So the character of the fiscal policy, whether it's spending, whether it's tax cuts, what it is exactly, does matter. But we are going to see some response from the government. And that will also play a role in where interest rates go, and in turn where the Canadian dollar goes.
Just as an example, Prime Minister Mark Carney saying we will defend our workers, we'll defend our companies, we'll defend our country, we'll defend it together. When you hear a line like that, there is the trade approach that goes into that. But as you mentioned, there's the possibility of like what happens with, some kind of fiscal support as well that would go into that.
Yeah, definitely. I mean, they've already talked about $2 billion to support manufacturing workers. And then on top of that, there's the chance that we get counter tariffs. And we need to take all of that into account, all of these cross currents. I mean, they're pretty severe right now. And each policy move does have an impact. And so we're trying not to overreact to any individual move and kind of try and wait to see how things pan out. I mean, we've seen President Trump back off on things relatively quickly. I don't think we're going to get that this time around. I mean, if you listened to him last night, it was, these are coming, they're here, they'll be here April 3rd, and they're staying for the length of his term. But what that means for Canada and Mexico isn't entirely clear. Perhaps at some point this becomes part of a USMCA renegotiation. It's really uncertain right now as to where this goes. And so it's tough sledding right now from a forecasting perspective.
Okay. Appreciate it, though.